Hi traders, I just want to shoot this short video to help with tweaking your entries. When I talk to people about coaching, one of the most common issues that keeps coming up is they're trying to find the perfect entry. So I thought I would do this video to give you some tips that I use to define my entry. Trade entries are very important in determining whether you succeed or fail as a trader. One good trade can make or break your month in the market. Yet traders, in my view, take trade entries for granted, assuming they are the easy part of trading and putting really little thought into getting the best trade entries possible. A better trade entry can significantly improve your risk to reward potential on trade, as well as giving you a better stop loss placement, which of course decreases your chances of getting stopped out in a big move in the market. So I want to share with you 4 tips of making better trade entries that can help you improve your trading results if you practice them, of course, consistently. That's the name of the game, practice. First thing I do is using limit orders to get better prices. A limit order or a pending order is an order that you place above or below the current price, depending on the direction that you're trading. So for example, if you're trading long, you place a buy limit below current market price, and then if price rotates back down to your buy order, you'll get filled long. Or if you're trading short, then you place a sell limit above the current market price, then if price moves higher into your limit, sell order. Limit orders give you the power to get into the trade at a price of your choosing. Of course, no entry is perfect, no entry is without a downside. The risk, of course, is you may not get filled at all. The market may go without you, but if you do get filled, you know you have got an entry at a price and a better stop loss placement than you would have if you just entered the market either at market or on a stop entry. So one good example of using limit orders is essentially entering a price on a price action signal around about 50% retrace using a limit order as price retraces to say 50% level of a pin bar, for example. This is my favorite entry method of all time. It allows you to get a better entry because it significantly improves your risk to reward profile of a trade by allowing you to place a tighter or a smaller distance stop loss, making it more likely that you'll get at least 1 to 2 risk to reward on your trade. The other big advantage of getting better entry via a 50% limit order or a retrace is that it gives you more flexibility with your stop loss. You can either take the trade, again as I said before, with a tighter stop loss than you normally would be able to with a stop order or an at market order, or of course you can use the stop loss at your normal distance away from the pin bar, for example, to give you more breathing room in the trade, to let your trade play out. I'm a huge fan of letting the market come to you, and limit orders allows you to let the market come to you by only entering if the market retraces to a price of your choosing. Of course, as I said, you have to be prepared to miss the trade, but the advantages of a better risk to reward on the trade and increased flexibility of your stop loss placement, in my view, makes it worth it. It doesn't bother me whether I miss a trade or not. Number 2, set your trades up at the end of each day. Simply analysing the markets and setting up your trades, for me, at the end of New York close is an easy way to improve your trading entries. Doing so removes all the noise, the mental confusion that comes with trying to trade the intraday charts. You know, I'm not a fan of that at all. Monitoring your trades just once a day helps you avoid the temptation of fiddling with your trades unnecessarily, as well as, of course, the psychological ups and downs, the issues that come with day trading. Myself and my clients primarily trade the daily time frame because it carries more weight than the lower time frames. So just by simply focusing on the daily charts, you're going to significantly improve your trade entries. Think of the daily time frame or the higher time frames as a filter for all the bad trades, all the noise and really irrelevancy of the lower time frames as movement goes, and as a result, signals on the daily chart are simply more reliable. When I say lower time frames, I'm referring to anything, any of those intraday time frames under the 1 hour time frame. Number 3, trading with factors, confluent factors. By confluent, I mean having things lined up. For me, it's trend, level, signal. Firstly, the trend of the market, what's the bias, finding the key horizontal levels, and of course, your signal. Once you have all 3 points in alignment, then you probably have a high probability setup on your hands. Number 4 is simply having a simple trading checklist and using it regularly. I know you know about this, not many people do it. It's not just finding a trade and placing it, it's about finding the right trades and having the confidence to enter the market. Your checklist helps you filter the good trades, good signals from bad signals, and also holds you accountable. Now, of course, if you haven't mastered a trading method or a system yet, you're not going to be able to get good entries into the market. So first things first, your first step is to get some proper education, some proper effective training, so you can develop an effective strategy, of course, which is what I teach my clients to do. I hope you found this lesson helpful, guys. If you have, just send a comment or a like below, and I'll talk to you soon. Thank you very much.